Hello, everyone. My name is Matthew Frailey with breakpointtrades.com. This is our website. And as this says, we are master technical traders. We've been in business since 2003. We do deep dive analysis of the markets, trade ideas, even mechanical trade systems. So anyway, in this newsletter or this video, I'm simply going to be recording one of our standard newsletters. And this will be for Wednesday, September 1st, 2020. So let's go to that. And let's start the recording. Hello, everyone. This is Matthew Frailey with breakpointtrades.com. This is the Wednesday, September 1st newsletter. Tonight's newsletter, as you can see, via the table of contents, is divided into 5 major sections. By the way, I am recording this in video format, and I will post the video later tonight. Also, please excuse my voice. I'm still under the weather. It's not COVID. One of my kids brought something home from school, and it's just knocked me out, especially on the sinus side. But, I have a fever. I have a very stuffed up, but it is what it is. And hopefully this passes over the next day or two. But anyway, this is the newsletter. As far as the market today, as I'll show you, it posted marginal gains except for the Dow Jones, which again posted basically a marginal loss. It was a very choppy day for the indexes and for a lot of individual stocks and sectors, as a lot of those closed with doji type candlesticks. All right. Out of the 21 market sectors we follow, roughly 50% closed up or down. So that tells you, how choppy it was today. I made a comment intraday how the market looked extremely toppy, and then we ended up pulling back from there. Obviously, nothing has changed with the trend yet, but here's an interesting stat from Sentiment Trader. They do a lot of, say, market analysis type statistics. So basically, since 1900, so the last 120 years, if you only held the Dow, you only held long for September and October, you would be down 73.7%. That's a pretty amazing stat, but it also shows you how seasonality wise, September, October usually are not very good. And we're in the beginning of September here. So just from a seasonality point, a little caution is in order. And obviously the market's, been up 7 months in a row now too. So please be aware of that. Obviously we're going to continue to play the trend as it is until it changes, but that doesn't mean you can't be a little more defensive, a little more picky about your trade ideas, etc. We've had some great trade ideas, and I did add a few new ones tonight. We'll cover those, but let's go and get started here. So item number 2 below here shows the index sector table, what transpired today and this week. So you can see today for the major indexes, slight gains with the Russell leading and with the Dow slightly down. For the week, the Dow, pretty much the same thing. The Dow is down, the other indexes are up. As far as the major sectors here, about a good 50 mixture of up and down here. Particular weakness in banks and financials. Money's been rotating out of there the last couple of days. So if the market's going to continue, it's going to be interesting to see if we see money start rotating back to there. Okay. Also, energy was quite weak. The strong area has been some of these big caps tech stocks. All right, like the communications sector that contains a lot of those FANG type stocks like Apple and Google, Netflix, etc. Utilities also had a pretty decent day, has a good chart. Oh, real estate also had a good day. On Monday's newsletter, I posted 3 long ideas in the real estate sector, and they've all triggered and done well. And I'll cover those when we get to those below. Currencies, US dollar down 0.2% and down 0.2% for the week. Cryptocurrencies all up pretty nicely here. Ethereum was the star today, up about 8.5%. It was basically in a bull pennant and it busted out of there, up nicely for the week. Commodities mostly to the downside here. You can see the exceptions were crude oil just up a tad, natural gas up 5.4%, but otherwise pretty much everything else down. And precious metals Gold basically flat, silver up 1%, but the stocks, the miners were down 0.7%. And both bonds, high yield corporate and TLT were slightly up today. Next, item number 3 shows the economic news calendar. So tomorrow, September 2nd, you can see we have initial jobless claims, factory orders, trade balance, and then natural gas inventories. Of course, Friday, September 3rd is the non-farm jobs payroll report. So that'll be a big one. And obviously we're mostly through earnings season. So, just a few stragglers here and there reporting, but most stocks have reported earnings. Again, the big news on Friday will be that jobs report. All right, let's go ahead and jump to the index charts first. So the first chart below, item number 4, is a daily snapshot of the 5 key major indexes. The Dow at the top. Again, everything's been in this long uptrend. You can see it was slightly down today and down yesterday. The S&P, hard to see here. It's basically a doji candlestick. Same for the NASDAQ 100, doji for the NASDAQ itself. The Russell, it broke this trend line last week. It's still holding it. Next, let's go ahead and move on to the individual indexes themselves. So here's the Dow. Again, you can see, it's been consolidating here for the last couple of weeks, sort of in a coil pattern. We'll see if it can bust out one more time or not. All right. So resistance here, support at that uptrend line. Next, moving on to the S&P 500 charts. So here's the S&P 500 chart. This one goes back to, say, January, February of 2020. And again, you can see this very long wedge-like pattern. We just continue drifting higher within this wedge. Is it going to drift for another month or two? Or are we going to finally have some seasonal weakness in September? We'll see. But we do have some divergence up here on the RSI to note. Next, chart 7, here's another daily chart of the S&P. This one doesn't go back as far. Again, you can see that doji today. It's essentially a black candle doji, so that has my attention. We'll see if we get a reversal down from that. Again, otherwise this year, all the rallies have basically tested, maybe undercut slightly the 50-day moving averages and then found support. 6 times that has happened this year. Now, I do think that number 7 was not going to be so lucky whenever we come back down to the 50-day. That's just my guess. We'll react to whatever happens. By the way, guys, on this video, again, over here on the left-hand side, this is our back-end admin. So these are the cells I already recorded. So as I move to each cell with these arrows, it then uploads the individual audio per that chart. That's kind of how that back-end works. Next, moving to the intraday charts, chart 8, here's the 60-minute view of the S&P. Again, we've been talking about this 5-wave uptrend. Steve said it could extend a little bit last night. We did extend up today. We pulled back in the afternoon. We have a potential little double top here to note. So we'll see what happens tomorrow. Again, we got quite overbought up here. Obviously, nothing's changed with the major trend. Next, chart 9. This is a 60-minute chart. The horizontal lines represent the areas where the NYSE tick indicator spikes above 1,000 and 1,500. They tend to be important support resistance guides. We had one that was generated this morning, right around this 45.31 area. Got a little bit above it, but really didn't, price didn't seem to mean much there. Otherwise, below here, these tick pivots are now support, but you can see, the nearest support on the tick pivot isn't until all the way down at 44.85. Next, chart 10, here's a 15-minute view. Again, basically a lot of sideways action this week, Monday to Wednesday. Okay, support here, 45.15. There's another support at 4,500, and then one here at 44. Near 44.68, and then there's an open gap. For a better support guide, look at the 60-minute chart above. Got all the horizontal lines showing you your support levels below. And finally, Chart 11, here's the 5-minute view. Again, you can see how choppy it's been the last couple of days. Big, nice update on Monday. A lot of chop on Tuesday. Nice update today, but we stalled at basically Monday's highs and then sold off again. So just a lot of nothing here. Next, let's move to the KISS charts. So nothing new on the KISS charts. No new DVTs, still 43.68. If you happen to be new here, the DVT, think about that like a dynamic variable trigger stop. They're basically, think of them as trailing stops that get adjusted higher as price goes higher. You know, it's a stop out idea someone perhaps could use for, say, a 401k plan that they have index funds that are tied to the S&P, for example. This is the daily chart. Next. Chart number 13, here's the 2-day candlestick KISS. So each candle represents 2 days, okay? So it's kind of a different approach, a little less noise than the daily. So the DVT here is a little bit wider at 43.48, say roughly round that up to 43.50. Basically what the DVTs give you, they give you a stop out level. So if the market was gonna, you know, have a crash like it did in February, March 2020, where it fell 35%, the DVTs would get you out well before that, maybe 5% off the highs and allow you to avoid that big correction. All right. Again, most of the time you're not going to have corrections like that, but these are just kind of like think of them like an insurance, essentially. Next. Chapter 14, here's the cycle timeframes. So the only thing I'm going to note here, the A on the daily, that's some amateur buying. You could see previously some amateur buying here. Then we had a pullback there in mid-August. Otherwise, the ATR indicator is supported on all these time frames. You can see on the 60-minute, ATR is pretty close and a little buy cycles. Again, we got quite overbought here midday, so pulling back a little bit. Next. Chart 15, here's the triple Qs. Again, busted out of this coil pattern nicely a couple weeks ago. You can see how the moving average ribbon pinched there. That ends up being the low risk buy opportunities whenever those moving average ribbons pinch. Really like those moving average ribbons. They're a really nice visual guide. But again, what stands out here in the very short term, doji candlestick, black candle. So we are quite stretched. In fact, I took a little short on the triple Qs today. So we'll see what happens tomorrow. Again, any shorts at this point, guys, are just trades. All right. The market's clearly uptrending. Really, the place to be is still the longs, but it doesn't mean, you know, you can't reduce your risk, can't be a little pickier with your longs and maybe take a short here and there. But obviously the trend is still up. But today, short term, this doji has my attention. And the fact, of course, we are in September now. And I just gave you the statistics above with the sentiment trader that if you just the last 120 years, if you stayed long only for September and October, you'd be down 74%. So doji here, take notice. Next. Chart 16, here's the 60-minute chart. You can see the MACD divergence that formed today's highs, or RSI divergence. So I pointed this out in the trading community during the day. I said it looked a little bit tired, and then it sold off the last couple hours. So I took a little bit of the short via the SQQQ. That's the triple inverse ETF. Again, whenever the market's uptrending like this, if you get a short and you get some profit, like let's say we had a good down day tomorrow, I would be more inclined to take profits because we're not downtrending yet. Your better shorts, guys, are after your initial decline and then you short a lower high bounce. Okay. So any shorts now are just trades or hedges. Next. Moving to the KISS charts, chart number 17, here's the daily KISS. So these DVTs have been nice here. DVT pretty tight here at 368. Next. Chart number 18, here's the cycles. So again, the ATR on these time frames are your potential support. Next. Chart number 19, here's the IWM small caps. So on the weekend newsletter, I said to watch the small caps. They had broken this little coil trend line on Friday. And I said, watch this. If it can hold this, form a higher low here, that would be a positive. And so far they've held up. Okay. So, and again, if the market wants to, break the September weakness, seasonality, whatever, and just have another up month, the Russell will probably do well. Okay. But if I was long to Russell, I'd probably have a stop in this area. I wouldn't want to see the Russell go back down through here. So we'll see if the market can miraculously hold up for another month or two. I think the Russell will outperform, but this obviously seasonality is against that. So we'll see which plays out or wins out. Next, chart 20. Here's the weekly chart. Again, you can see this long consolidation we've had since March. Okay. Again, it's helped that the MACD is recycled back near zero. That's been a positive. Remember, corrections can occur in price or time. And essentially, we've had more of a time correction here, this sideways. And that was enough to at least work off this very overbought condition you had back in February, March. Next. Chart 21, here's the 60-minute time frame. Again, the support area I'd be monitoring is this trend line. I'd like to see it hold over this trend line if you're bullish, okay? So that does it for the major indexes, guys. Now let's look at a few market indicators. Chart 22, here's the VIX. Really not much to say on the VIX right now. It's kind of a little below its middle Bollinger Bands. The VIX is a pretty good system whenever it closes outside its Bollinger Bands and then back inside. All year long, those have been extremely good buy signals. But right now, it's kind of in the middle of nowhere. All right. Support tends to be the lower bands. We're nowhere near that. And we're nowhere near the upper bands. Next. Chart 23 is the 60-minute chart. Now, last night, Steve showed the VIX on a 60-minute time frame. He showed one example where it would come down in a wedge. And so far, his projection's playing out. So we'll see if it now gets a pop out of that wedge. If it does, you can see the MACD divergence, then we're likely to see a down day tomorrow. Next. Chart 24, here's the VVIX zoomed in view. Again, it is firmly below 110. Whenever it is below 110 and then goes back above 110, that is a flashing red signal, but obviously that's not occurring yet. But this is something to watch every day now. Next. Chart 25, here's a comparison chart, basically breadth. The large cap advanced decline line versus the small cap advanced decline line. You can see these divergences here. Again, all year long, they've mostly moved together. And last year, you could see at a divergence back here in early August, and that played out for a correction, right? Albeit a shallow correction. Well, markets rallied back up, but you have another divergence here. Now, this can be healed if market just continues going higher and this goes right back and makes another high. So this divergence can be healed, but right now it is a divergence to take notice of. Next. Chart 26, here's the triple Qs, and this indicator here is the NASI plotted as a histogram. And then again, I've shown this chart many, many times, but it really stands out. When you have time, take this chart. In our newsletters, we give you the live chart URL so that you can save it on your side. But you'll see that rarely does the NASDAQ continue making new highs with this negative, all right? You can see it just has been negative since July, but the NASDAQ keeps going higher. All back here, when you see this negative, you had corrections, and then when market makes new highs, it goes back positive. So this is definitely an anomaly here and a warning sign. It's not something you trigger from, but it is something that is a warning sign just to be aware of. Next. Moving to bonds, chart 27, TLT. It's still in this coil pattern. We'll see if it can bust up out of here or not. Again, remember, this moves opposite to rates. So if this breaks to the upside, then long-term rates would be going down. That would possibly signal that the Fed is just going to continue pumping to infinity. Next. Chart 28, J&K, high yield corporate, junk bonds. This represents liquidity. So as long as this is uptrending, the market is healthy. Little doji here today, a little overbought. So, just take notice of that, but otherwise uptrending. Next, moving to market sectors. This chart shows you 10 of the major sectors. I'm just going to look at a few of the individual sectors tonight. So let's take a look at those. Chapter 30, here's XLC. That's the communications sector. Remember, this has a lot of those big cap tech stocks, FANG stocks, Facebook, Google, Netflix, Disney, Charter, and, busted out of a coil, and it's been continuing higher. It's these stocks that have been leading the market. Okay. Something to keep an eye on, because if these stocks ever start to give it up, start to weaken, that could spell trouble for the market. Obviously, for now, they continue nicely higher. Next. Chapter 31, transports. They've been weak this year since May. Right now, they're forming into a coil. Watch to see which way this breaks. Notice your moving average ribbon is pinched tightly. Next. Chapter 32, financials. They've pulled back off this resistance. So have the banks. So the question is are we going to get some money rotating back into here from, say, the technology? That would perhaps help the market extend. Now, if we don't see sector rotation back into here and the triple Qs weaken, then I think that could spell some trouble for the market. Next. Chapter 33, utilities. I pointed out this 920 MA squeeze on Monday. I said it looked like a bull flag, and you can see nice pop. This looks bullish. Next. Chapter 34, biotech. This was definitely a low risk buy setup back here near that double bottom support. I've been long this. You got the 200-day moving average approaching, but it's been a nice trade if you bought it here, or even if you bought this trend line break. Next. Chapter 35, IYR real estate. Look at this nice move the last 3 days. If you go to my Monday newsletter, I pointed this out as a long idea on this trend line break, and I presented 3 ideas, and they've all done well. Now, you could have just bought the ETF here because you see, it was up nicely on Tuesday and, of course, today. But let's take a look at those individual names. Chapter 36, AMT had a nice clean resistance here. Finally broke out today. You may have triggered yesterday on a slight little break, but nice trade, up 2%. Next. Chapter 37, IRM. This had a really beautiful pattern, kind of a cup and handle look. This broke out on Tuesday. Nice follow through today. Again, in the real estate sector, right? Next. Chapter 38, EQX. This was up 3%. So that was a very nice move. Again, very nice, clean pattern, nice, clean horizontal resistance, again, in the real estate area. So congrats if you caught that. That sector stood out to me on Monday. That was in Monday's newsletter. Next. Chapter 39, EEM, emerging markets. They rallied off the support a couple weeks ago, now testing the 200-day moving average. They took out this downtrend line. Let's take a look at a weekly chart. So chart number 40, here's the weekly. So the bullish view is, guys, that you've had an ABC, this should be C, not B, that you've had an ABC correction. The lows are in, and now this is going to rally up. So if you were long emerging markets, if you wanted to give it really wide stop, your stop would essentially go right here. You could see how the 2018 highs was your resistance, became support. Let's move on to commodities. Chapter 41, crude oil. Again, in this parallel channel. Stalling up here a little bit. Your resistance is the 50-day moving average and the downtrend line. Next. Chapter 42, natural gas. Up 5.5% today. Really nice move. Look at this volume. Again, a lot of this is due with the hurricane. Remember, natural gas, moves with the weather, and that's helping this break out. Plus, seasonality time tends to be stronger this time of year anyway. Next. Chapter 43, copper. Bullish view is you had an ABC correction into the 200-day moving average, but otherwise, it's got to break out of this pattern. Next. Chapter 44, DBA. So far, unable to take out this resistance, kind of choppy here lately. Next. Chapter 45, URA, uranium ETF. Super move this week. Look at this, up another almost 3% today. I pointed this out as a low risk buy last week, and I talked about it on a weekend newsletter. So I've been long some of this. I took a little bit off the table today, but I'm trying to keep this as a swing because overall, I think this will make a new high. I think it's in a bull market. Let's move to cryptocurrencies. Chapter 46, Ethereum. This was the start today. Really had just a beautiful pennant pattern here. Started to break yesterday. Big breakout today, up 11.35%. Look at that. Beautiful move. Next. Chapter 47, Ethereum coin. It follows Ethereum essentially. The stocks, ETHE, obviously moved up in concert. Next. Chapter 48, here's Bitcoin. So Bitcoin's been all over the place this year. You had this rounded top back here, March, April, into early May, had the big sell-off, held this big support area right around the 28,000 area. Rallied, had a bull pennant or a bull little wedge. And now it's got a potential wedge or a potential flag coil setting up. If it can take out this resistance, that would be quite bullish. Next, looking at some individual stocks, HVBT. This was on the long list on Monday, so still looks decent. Look at the volume patterns. I'm long a little bit of this one. Next, Chapter 50, MSTR, another coin stock, digital currency, quite expensive. So this may or may not be for you because of the price, but you can see the resistance trend line right around here. Mara is another one that's probably the king. I don't show that tonight. Next, Chapter 51, Coinbase. Kathy Woods talks about this a lot. This was the setup on Monday with this little kind of flag trend line, and so far it's moved up a little bit anyway. Next, Chapter 52, US dollar ETF, UUP. So far, pull back from this double top. Little doji today. Next, Chapter 53, gold. So gold's been pretty volatile lately too. Had this big washout crash here, which held this double bottom support back there in March and April. Rallied up, it's broke this downtrend line. It's still holding that. I want to see it hold this broken downtrend line. Next, Chapter 54, silver. Again, silver overall though is in this big range from 30 to 22 over the last couple of years. That's its big range. So very choppy commodity. Next, Chapter 55, GDX, pulling back a little bit. Again, the bearish view is here, you simply have an ABC bounce. I'd like to see the stocks outperform. They underperformed today. Next, Chapter 56, there's the 60-minute view. You can see this trend line. Now, this has sort of an inverse head and shoulder look to it. In fact, if it pulled back a little bit, not too deep, maybe this 32 area, and curled back up and took out this downtrend line, this trend line, that would be bullish. That would have me buying it. We'll see if it can do that or not. Next, Chapter 57, AXU. I showed this one a couple weeks ago. It was on a tight falling wedge, broke out of the wedge, formed a higher low. Now you got a little resistance trend line here to monitor. If it can bust this area, take out the 185 area, maybe it can go up to the 50-day moving average. All right, guys, finally, let's move to trade ideas. First off, look at some of these FANG stocks. Here's Apple. This was a long idea from the weekend, and this coil pattern busted out on Monday. You can see today, big doji candlestick. A lot of stuff ended with these doji candlesticks. So short term, quite overbought. You know, we could pull back from these dojis. Next, Chapter 59, Google. Also quite extended here. Look at these little doji candlesticks up here. So it's already had a big run from here. Next, Chapter 60, Facebook. It's also had a nice move from that coil. Next, Chapter 61, Microsoft. Potential double top here if it wanted to sell off. So you see my point, guys. If some of these FANG stocks, you know, they look quite extended, and if they start selling off, the market could follow. Next, Chapter 62, Netflix. Now this did better than the other FANG stocks. Had a nice tight pattern here, had a bigger coil pattern it busted out of. It's been in a range for 1.5 years, so it's been really moving up, but it is overbought here in the very short term, but otherwise, chart looks good. Next, Chapter 63, CSTM. This is a long idea of mine on Monday. So you can see it poked its head over the trend line horizontal resistance on Tuesday. Maybe you bought it there, maybe you didn't. I would have put a stop right here at that Tuesday's lows for a swing. Today, it followed through very nicely. So if you were in this, I was not, I missed it. I would consider selling half the position, locking some gains, and moving the stop up near your entry so that you're guaranteed a profit. That's the way I like to trade. Next, chart 64, Fold. This is a biotech stock. I love this long base. I love it. Okay. Moving average ribbon curled up here. It's in a bullish configuration here for a while now, for the last month. And it's trying to go. I'm trying to give this one room, so I bought a position. Yeah, I talked about this one a couple months ago back in here. So back in June, July. So I've been trying to hold it, and I still hold a position. Next, chart 65, K-Web. This was on my Monday newsletter. Okay. Chinese internet. Obviously, it got destroyed this year. You can see the sell-off from February. And all the rallies have been capped by about 9.5 points. That represents the dotted lines here. Notice every rally has been unable to break that. That's what you call symmetry, okay? But so far, we're slightly exceeding symmetry. This bounce off the lows is bigger than the previous rally attempts. Now, I'd like to see this continue. I'd like to see it at least get to the 50-day moving average here, maybe even a little higher. Then that will be a confident symmetry break, and that would put the next pullback at very high odds at forming a higher low. So essentially what you do is you would look to add to your position on the next pullback, as you'd be expecting a higher low, or add to your position or buy a new position, okay? But so far, this is looking good. Next, chart 66, NBAC. Steve had it as a long idea last night. It's a nice little tight coil. It triggered today. Notice it's stalled right here at the other main resistance. That was also an area maybe to take some profits if you bought the trend line break here. I like these coils, guys. You buy the coil break, you put the stop right at the lower trend line of the coil initially. Next, chart 67, ASML. This has been a really nice runner from that trend line break back in mid-August. Maybe time to take some profits, guys. Next, chart 68, Etsy, another beautiful coil. Busted out last week, and it continues higher, though off the highs today. This would be the next target area, this 225-ish area. Again, you have ample profits if you bought that trend line break right around the low 200s. So I've sold half of my position. I still have half of it. That's how I trade. My stop is on my remaining position. I don't know. I don't remember exactly where it was, but I know it's at least above my entry. So I'm guaranteed a profit no matter what, especially since I already took some off the table for a gain. Next, chart 69, ALLE. This was a long idea in the home construction area that I put out on Sunday and Monday, and you can see it's done well. Had a nice clean resistance right here at 142.50. Nice volume patterns too. Next, chart 70, CNK. This was another beautiful pattern. This is what you like to see. Divergent low, wedge-like pattern, MACD divergence, 3 pattern push. Now what that means is you had 3 higher lows on the RSI, but 3 lower lows in price. That's like a double divergence. Those are very bullish, and gave you a great trade, slightly up through the 50-day moving average. This would also be a candidate to buy now on a pullback, on a light buying pullback, if it came down into this area. Next, chart 71, MIME. Beautiful move out of this coil. Again, this trade should be done for you guys. If you still want to be in some, maybe you could have a stop, trail it pretty tight, maybe yesterday's lows, something like that. So this is, again, these coils, we like them because your long entry would have been the break of the coil and say the lower portion of the coil. So the coils give you very good risk reward because your entry and stop can be very tight. Next, chart 72, NIU. Here's another one that's played out. Steve showed it as a second flag. You can see it triggered here. So if you bought this day, yesterday, I'd have placed a swing stop right at the candle low on Monday. Okay. Again, if you're listening to the static newsletter, make sure to look at my video, guys, because I show where you can see where I'm pointing. Okay, nice follow through today. Next, Charber 73 XSPA, another nice clean break through that trend line. Take some profits though. Next, Charber 74 DOYU, really nice trade to this tight flag pattern. You can see today stalled right at the 50-day, which I expected. So that was an area to take some initial profits. Again, you could still have a partial position, but that 50-day was going to be a first stopping area, resistance area, and it was. Next, Charber 75 FLXN type pattern triggered yesterday. Little follow through today, but so far it's not doing too much. Like to see this one get going. Obviously, you have the declining 50-day moving average above. It's got to get through. Next, Charber 76 Beam. This is the new one from Monday. Triggered on Tuesday. Little follow through today. Again, at this point, you could have a pretty tight stop on this one. Yesterday's lows, maybe the lows today. Next, Charber 77 DCT. Another one, really nice basing pattern. So far, it's holding this base trend line. Next, Charber 78 BNL. This had a clean resistance. It's 27. Triggered on Tuesday. Remember, this is a long idea on Monday. Was up today a little bit off the highs, but so far it's giving you a positive trade. Next, Charber 79 CTAS. This one's been on the watch list for a couple weeks now. Finally triggered on Tuesday. So far it hasn't done much. You can see the MACD's trying to curl up. I want to see it follow through here more though. Again, at this point, I'd probably put a stop at yesterday's lows. Don't want to give it much room. Next, Charber 80 GRWG, one from Steve last night, bull flag. You may have bought some over the trend line today, or you may wait for that 3270 area to be taken out. Either way, your swing stop would be right around that 30 area. Next, Charber 81 Neo. Steve had it last night. Honestly, this could go either way, guys. This could be a short if it loses the slower trend line, or it could be a long if it breaks this upper resistance trend line. Next, Charber 82 Body. Steve had it last night as a long. Still valid if it can take out that 780 area. Next, Charber 83 AMC was on the watch list last night. Still valid if it can take out this resistance here. Hasn't done so yet. Next, Charber 84 ELF. It's been on the watch list for a while. Still looks valid. Next, Charber 85 Sonos. It's been on a watch list for a while. Cup and handle pattern. Here I drew a little downtrend line to monitor. I'm already long some of this. By the way, it is a potential buyout candidate. If you do some research, they've had lawsuits with Google and Apple. And I think they won one of their Google lawsuit. I think they still have another couple lawsuits, but if they win that, more likely Apple or Google is going to buy them out, I think. So I don't know. I'm just holding a little bit of this for now. Next, Charber 86. Here's a new one, STZ, sort of a double bottom. You could give it a stop right here. I would look at an intraday chart, see if you can get a better entry. Next, Charber 87 Lennar. Beautiful ascending triangle pattern. Resistance is right here at this point. Your stop would be right here at down today's lows, essentially. Next, Charber 88 CEIX. There's a new one. Breakout idea. Resistance around this 2350. Where would I put a swing stop initially? Right at this, maybe today's lows, yesterday's lows, something like that. Next, Charber 89 BEKE. Probably my favorite pattern here tonight. Nice little base, volume picking up. In fact, I bought a little bit in after hours here. You could use this high as a resistance or this high or both. Your swing stop would be right at the low here today. Next, Charber 90 Edit coil pattern. Resistance up here, support here. Next, Charber 91 car, kind of a cup and handle. Support is this yesterday's lows, essentially that higher low. Resistance, little downtrend line here, and the highs. Next. Oh, chart number 92. This should have been up with the triggered ideas. This triggered last week on this trend line here, and then took out this resistance on Monday. So this has been a nice trade. This is one I've been long since last week. So this one got out of order. So there you go, guys. By the way, that does it for the newsletter here. And I will see you tomorrow. Take care. Have a great evening.